Hey everybody, welcome to our VF live stream. Today I'm joined by our regional manager, Stephen Allen.
Hey everyone.
Hi. So today we're going to go through kind of what's going on in the mortgage market, as well as a few questions that we were asked, and then kind of touch on some things happening here in North Alabama. Stephen, why don't you give us a little insight into what happened this morning?
Gosh, today was kind of a rocky day as far as rates took a hit, but I mean, what day hasn't been kind of a rocky day as far as rates go? I think the big thing, what I'm seeing, Carly, is it's just a lot of unknowns right now. That's the big effect in what's going on in the business is nobody truly knows what's going on. Originally, we thought there was going to be 7 rate reductions in 24. Now statistics are showing 4 to 5 is what most people are saying. But to be honest with you, a lot of people are even going out there saying that those won't happen until June or July. So, we're going to really have to just wait and see what happens in the market. That's my take on it.
Yeah.
What about you? What do you think?
I think, from what I was, seeing and reading this morning, those projections got pushed off again, like you said, June or July, possibly May, but with where inflation numbers came out today and how it affected the bond markets, we're not quite there yet. We are back up close to the 7s, some even over the 7s again. Generally, obviously, that's a very generalized term, and we just kind of have to sit, wait, and see.
Yeah, and one good thing about this market, and this is something I've noticed on recent statistics coming out from HAR, home prices are still on the upward trend. So that's still going up. The market might be affected slightly by the interest rates, but what are you seeing? I see things still moving, still going under contract. What do you feel?
Yeah, as far as speed of contracts, we're seeing it more than ever now. I think we're seeing multiple offer situations happening again. So you've got a lot of buyers in the market. Interest rates have dropped. People are kind of ready at that, and they're just kind of ready to, get back to buying. And they're struggling because there's so many people and not enough inventory yet. So, everyone's talking about all this new construction that's around and everything, but we need it. That's how people are going to be able to get into homes.
Cranston, it's funny you would say that today. Yeah, it was a big day for rates. This morning we'd seen a jump in rates. As soon as the markets opened up, it went up 50 basis points, and almost immediately after it jumped right back down. So, in today's world, it's kind of a whiplash effect. If you don't like what it is right now, hold tight. It's going to be a little bit different. But a lot of that's funded by, just where inflation's at right now. That's the big if in the room.
So we always tell people, interest rates change by the hour, by the minute, by the day. How would you explain to a buyer right now who isn't locked yet, and then this happens this morning and this is what they see? What would you say to them? What would be the advice you'd give to your borrower right now?
So it's interesting. A lot of people say, hey, let's just go ahead and float the rate, which means not lock. Let's not lock. Let's see where it goes. The problem with that is if you take that chance, it's like gambling. You don't know what that rate's going to eventually do. So you're taking a big risk. Our company leadership tends to take more of the approach that it's easier to make adjustments on a loan once it's locked than to try to wish you would have locked. And so I think that the better approach is to make sure that you lock in the first place. You have more options available to you if you do lock, especially if you do have a rate buy down or a float down program that's available to you. There's more you can do by locking than not. And with this tumultuous time that we're in, I don't know what tomorrow's going to bring. So you never know what waiting will do.
Yeah, absolutely. Let's get into a couple questions, unless you have anything else to add on today's market.
Yeah. So we set out for some questions. Here's some of the questions that we got. Let's dive into the first one that we have here. Let's see. Carly, I'll let you answer this one. What should I know before buying a house?
Absolutely. Know that you need to trust your loan officer. Before buying your first house, it can be a scary process, right? And I always tell people that, that's why you have us, because it's not scary to us as much as it might be scary to you. We are here to walk you through it. There's going to be a lot of options thrown your way and all of that. Just trust that the team you're working with knows what is best for you financially in giving you their set of options for you to choose from.
Yeah, and I look at it like this. A lot of times people have maybe done 1 or 2 mortgages in their entire life. A lot of times it's their first home, as in this question. We've done this thousands of times. we know what we're doing in this regard. You got to trust the experts in this process. Even though that it might seem to be like it's a tough go at this experience for you, trust your lender, get to know them, trust that we've got this under control, because there are a lot of twists and turns on this road to home ownership, but in the end, it's absolutely worth it.
And the biggest thing I'd say to know is that you cannot ask too many questions.
No.
There's a lot of questions that you need to be asking, and the more, the better. The more you understand.
We want you to ask questions.
Yeah, the smoother your process is going to go, the more you understand it. And if you don't understand something at any step of the way, whether it be with your agent, reading your contract or talking about interest rates or loan programs, any of that, the best thing you can do is ask as many questions as possible so that you know what you are doing. It is the biggest purchase of your life. You need to know what's going on.
Yeah, speaking of the biggest purchase of your life, Carly, let's take a moment and make all the compliance folks happy. We'll be back in about 3 seconds. All right, there. We got that. We'll put it up again here in just a few moments. Let's go to one of our other questions that we got in. And also, if you are watching this live feed and have some questions, we can see your comments. So feel free to jump right in, throw your comments on. We can post that up here and we can actually respond to you on the fly. So if you're watching us wanting to know something, anything about mortgage, just jump right on in here. All right, so is perfect credit or large down payment required to be able to qualify for a mortgage? Carly?
No, absolutely not. There's all sorts of credit ranges, right? And there's all sorts of options for those. Large down payments are absolutely not necessary. We don't really want to see super low credit with lots of problems just because that's going to make it harder on you. But no, neither of those things are necessary. There's always options. There's always paths forward. And even if it's not an option today, there is a way to get you there. So to start, just reach out to your loan officer, have a conversation, and we will build a plan for you.
And most of the properties right now that we're doing, are between 3 and 5% for a lot of folks right now. So, there are some really good programs available. Of course, there are always 100% down programs, but guys, gals, nothing is free. So if you hear somebody saying 100% down financing, the devil's in the details. It's somewhere built into the loan. You just may not understand how that product works, but the old saying in life, nothing is free.
No.
Another great question.
Do all lenders provide the same thing? / how do I pick one? Well, you just pick us. It's that easy.
You answered that question really good.
Yeah.
What was your answer to that?
No, I always say, we all do the same things. We might do it differently, but at the end of the day, we close loans. We have a multitude of loan programs. How we do it is what's different. The most important thing when picking who you want to work with is how do they make you feel? Because we're all going to get you to the closing table. But are you comfortable? Are you happy? Are you being communicated with? And do you understand what's going on? Is your loan officer making you understand what's going on? How do you feel during the process? Yeah,
it was interesting. I actually met with a real estate office, awesome group of people just about 30 minutes ago. And one of the questions that they had said is, does your team know what they're doing? And, at first I thought that's kind of like a interesting question because I would hope we know what we're doing. Right. But, she went on to elaborate that recently they've had some people that have come in as lenders basically talking about programs. And they said, so tell us about Fannie Mae, tell us about Freddie Mac. And as a lender, we all know what Fannie and Freddie Mac are. Mm-hmm. She told me they didn't know what Fannie and Freddie were. Y'all, if you don't know what Fannie and Freddie Mac are in our industry, we might need to think a career change because that is like the core center of what we do is
the basis of everything.
Yeah.
Oh my gosh. Yeah. No, and that's the thing is behind the scenes, you see us having conversations with you guys about, loan programs and loan types and all of that. But there's hours and hours and hours every week, every month, every year going into keeping up with current loan programs, laws, rules, everything that goes into that.
Yeah, Cranston, you've got a great question there about escrow. How does that work? So a lot of people don't know what escrows are. So escrows, for those who may not be familiar, it's basically the mortgage is including your homeowner's insurance, and your taxes in your monthly mortgage payment, all in one. It's a bundled in one pretty package. Now, what's great about that is if you are shopping for, like yourself, a insurance representative who represents a great company, if you're working with folks like you want to know that that bill's paid. Well, how that works is you have an escrow account. Escrow accounts are there to make sure just that your bills are paid and that your mortgage insurance is going to be covered, or your homeowner's insurance rather, is covered in there. And then the other alternative to it is the taxes. And with taxes, you want to make sure that your taxes are paid. If you don't pay, you don't stay. That's the old saying. So, I mean, with regards to that, if you don't pay your taxes, that's pretty important part of your mortgage process. So paying those taxes, that's all in a escrow account. All of that is lumped right into your monthly payment, and that monthly payment makes it easy for you to do what you need to do without having to worry about making 3 or 4 different payments every month. And it's just much easier. A lot of lenders actually require it. Unless you plan on putting over 20% down and getting an exception from your lender, doing a homeowner's insurance and taxes in an escrow account, it's going to be required.
I am a cautionary tale to that. Stephen can tell you. Years and years ago, I wanted to pay my property taxes and homeowners insurance outside my mortgage, and I did. And then it became January 1st, and I realized I forgot to pay my property taxes.
Yeah, Carly was a client before she was ever an employee. And I tell you, when you think of, as you other lenders out there who may watch this, when you think of that particular client, that's Carly. She was very thorough, very read every detail, all the pages, and wanted to do it all on her own. I have mad respect for it, but you were a challenge of a client, and it was awesome to work with you. But of course,
to this day, he tells me.
Yeah, one of the hardest I've ever dealt with.
Yeah, no, but it's, people ask, like, what is the benefit to it? The benefit to it, escrowing your property taxes and your homeowner's insurance, is that you don't have to think about it. Right. That auto draft comes out every month with your mortgage and it's paid. You're good. It's done.
All right, so the last question here. I want to buy, but I'm not sure when the right time is. Will rates go down?
Yesterday was the right time to buy.
Here's the downside.
It's always a good time.
Let me throw in that, of course, if you talk to a realtor, there's always a joke. If you ask a realtor when the right time to buy is, they'll always tell you right now because they want to make a sale. I don't necessarily believe that. There's truth to that. The right time to buy is always now. And why is that important? Because you have factors that go into your mortgage and into your home value that are way beyond just buying what the purchase price is. You got to think, our market right now, we are averaging between 4 and 5% value appreciation on our properties. So if you're thinking about buying, what that means to you in value appreciation is that today a property value is going to be worth 4% less than what it's going to be worth next year. 4% of a $300,000 home might not sound like a lot, but that's a lot of money. And if you compound that yearly and continue to increase that property value, if you tell me that waiting 3 years until a rate is what you would consider comfortable is the right time to buy, you're losing out on nearly 14% of appreciation in your home value. And that's not my guesstimate. That's based on statistics by Huntsville Area Association of Realtors and other experts in our market. We are going to continue to see appreciation. We've got a beautiful city here that people want to live in. It's awesome to be here. So yeah, now is the time to buy. Don't wait for rates to go down. There's a little thing called a refinance. We got you covered. We will take care of you. And we've got some awesome ways to do that. Tell them about what we're going to be doing, Carly, as far as weekly shows and what they can expect moving forward.
Weekly shows, yeah, so you guys are gonna get used to seeing our faces around here. We will be here every single week. We will be bringing in some of our other team members to hang out with us as well, some of our agent partners and other partners in the business, just to kind of be here to teach you guys about what we do, help you understand it, and give you a platform to ask questions.
Yeah, so once again, guys, what you're seeing there, I want to make sure that that's clear. A lot of the things we talk about today, we want to make sure that everything is broken down very plain and easy for you here. We want to work with you. We look forward to working with you. We hope we have that opportunity very soon. I know Carly and I, we're excited for those of you who have joined us today, looking forward to doing more of these. If you got ideas on topics or things that we can talk about moving forward, let us know. we want to put out content that matters to you, content that's relevant to you. And hey, you know what? We're going to be asking a lot of you who may see this to join us on this show very soon. We're going to have folks from our company. We're going to have other realtors that join us. We're going to have industry professionals joining us. The whole goal of this is to get material to you that's relevant to where we currently are. So everybody go out there, make it a great day, and we can't wait to see you again next time.
Bye.
Bye.